this Thursday, and we're now at the 10th of September, 2020, 9:25 a.m. Central Time. We've had a lot of data this morning. Probably the most important piece to start the morning out was the European Central Bank announcement to basically do nothing, and what that did is it kicked up the eurocurrency. Ms. Lagarde was saying that they're really not concerned about disinflation setting in. The problem that they're having is the higher this currency goes, it fights off inflation and it keeps it lower. So it's going to be a tightrope act that she has to walk. They're going to look at everything that they've got in their toolbox. They are not going to peg the euro to a certain number or certain range that they want it to trade in. At least this is what she said. So that's the first thing. Then we have other data. The wholesale inventories came out and they dropped a little bit more than the trade had looked at. So sales were up, not as much as the prior month in June, but they were still good for July. And remember, you had that June where nobody had been out from March through April and May. So that was a big ratio there, and you came up nicely. PPI came out with the final demand up 0.3. They expected it up 0.2, and producer prices ex food and energy up 0.4. They expected up 0.2. So it's running a little hotter than the market thought. The Fed probably likes that. Jobless claim data came in unchanged at 884 in the weekend at August 29th. The market expected a drop. It did not get that. Continuing weekly claims went up actually 93,000 to 13.385 million. Now we're starting to hear talk already about GDP forecast, the unemployment numbers as they're going to start coming out. The market is looking for another drop in the unemployment rate, maybe towards 8% or so. So got to keep your eye on all these things as they're going to impact the markets. We've had more of the rally in the stock indices. I had told you yesterday, if you were looking at my end of the day wrap up, keep your eye on the 18-day average of closes. It's probably going to offer some stiff resistance. Wouldn't be surprised if that is the case. Dollar seems to be resuming its downtrend trajectory, so that rally that we had might be something of the past. And the euro, well, can we get a close over 119 today will be what the market looks at. In about 2-3 minutes, we're going to get the numbers from the EIA on the energy. As I told you yesterday, I did not think they were friendly numbers out of the API. You did have a net draw of just over 1 million barrels, but I think the market wanted more than that. And in the grain market, it's still more of the same, still acting quite friendly as China continues to buy, and we'll see where that's all going to go. Now, when you put this all together, you get technical trading tips. And if you haven't seen these brochures, they're pretty interesting. This talks about what the pros look at. And you can see, do you even know what a Gantt square means for the NASDAQ? Do you have the ideas of relative strength, money flow indexes? I use a lot of these. So when I'm looking at markets, you may call them something different, but they're pretty much there. You're looking at where's the swing line going, money flow, strength coming into the market. How do you optimize a stop? If you're a trader, you've got to learn how to do that, because what you start with is a stop. Do you really want to keep that risk on to let it go that way? If you'd like to find out more, just go to our website. Under free offerings in the bottom right, it's right there. Open it up, that link, and away you go. Just take a look, sign up for what you want, and we'll email it to you. I'm Ira Epstein. See you this afternoon. Have a good trading day.